So let's look at point of control here. So we got two examples and they're kind of opposite examples. So here in this day, the day opened, the initial balance is right here. The market stayed within the initial balance for a good portion of the day, and then it explored lower prices. But when it did that, the market did not move its point of control down, right? So where's the fair value area? It's still up here, right? So would you say that this move is valid? Well, potentially no, because it didn't spend enough time down here. Like, it needs to spend more time enough down here than here, right? Just because it's basically fair price. So what is fair price, right? Where is the market spending time at? And then when the market spends time in a certain area, volume occurs in that area, and the market essentially accepts the new area, right? Because as there's trading that's happening, there's volume, right? So as the longer time frame traders are essentially buying and selling on the other side of those orders from the short-term traders, then you get the entry off the longer time traders, if that makes any sense, because they're going to do whatever they can do to hide some of their orders. Now, that's not saying they are active or they are not active. It kind of depends on the trading range, and you can see, like in the past, this trend is actually quite old. Like, it started way up here. The longer time frame traders were quite active, and then we come all the way down here, and we're just looking at the last 4 days, right? And then we kind of have a reversal again. So if we kind of just look at some of these days which the market didn't really do a whole lot, when we first start getting into a trading range, this is when this gets really useful. So you can look at point of control between different days, and you can also look at point of control within the same day. So what I'm illustrating here is that the market spent quite a bit of time in the upper range. It explored lower prices, but it didn't move down. The point of control did not migrate further to the downside, whereas price did. But you can see that price actually got rejected, and then it closed right here where this V is, right? You can see this arrow, and then the following day it did explore back into the value area, but you can see that the lower time frame traders are in control, because if you're a longer time frame trader, you wouldn't be interested in the point of control from the previous day. You would be interested in like a monthly high, a monthly low, and right now the market just isn't there. So that kind of gets some insight into this day. And then if you split it, so here, so looking at this is very similar to a bar chart. You just don't see any wicks. So consider this. Okay, where did the market spend a lot of time, right? So if you do have trouble understanding this structure here, you find some value in the actual TPO chart. So basically, if you want to figure this out, right? So if I were to take my cursor and say, okay, price spent a lot of time at this level, just looking at it, right? But it also spent some time here, right? But can you tell on the chart, just based on that structure, right, where was the fairest price, right? And it might be a little bit confusing, and that's where the TPO chart comes into play, right? So basically, as the day is forming, let's go to the next day, okay? So here, so it opens at the capital A, right? And then it makes a little point of control. Now, that says 0.5, right? And then our point of control finally forms here. So that's 16, right? So during the course of the day, it looks like a decision was made based on the previous day's point of control, right to the tick basically, and the market moved lower, and then when it did that, there was more volume on the downside, so it essentially accepted that price. So even though we are at the end of a trend, it does illustrate that you see the fairest price moving lower, right? So now we have a whole bunch of trading from lower time frame traders right here, right? So then if we come over here and we split the profile, let's look at this. So So yes, it is obvious in this case. You can see it actually, it looks like that was I see 25, right? So the market comes down, and it's sort of one time frames down a little bit, right? So, but you can also see, okay, it's sort of rejected right here at this R. You can see a single print there, but you can see that definitely the market spent a lot of time in this particular area, right? And then basically in the following days, you could probably have a pretty good understanding just based on that, right? So you can also look at the value areas, and yeah, so if we come here at this day, so what happened here, right? So we got our capital A and an initial balance for the open, right? So then it had a hard time breaking out of the area, right? Because the initial balance is, in this case, is quite wide relative to the range, right? So, and I believe this day was actually a Monday. So if you were to say, okay, so we get A, B, C, so it prints the capital letters first, and then it goes on to the lowercase, right? So the point of control is just slightly above the initial balance, right? So, but it didn't really do much in this case, right? So we did see that the point of control initially, okay, we got A, B, C, D. So then where's our E, right? So E's up here, right? So we can see, okay, in the first 2 hours of trading, our point of control would have been about here, right? And then it moved up about 1, 2, 3, 4, 5 ticks or so, right? And then it closed right here for the day, right? So, and then when it came up here before the market closed for this day, the market did come up, but the point of control did not move up, right? And then as the day closed, it went back down, right? So that's it. It's a lot easier than just looking at this, right? So whether you look at a bar chart or this chart, you can basically say, okay, where's my fair value? And you got to understand inside a trend, right? So if we're in a downtrend, basically the fair value is going to be behind price, and fair value is going to lag, right? But price is going to lead it, right? So basically price is going to explore new areas, and each session or each auction, the fair value is progressively going to follow price in whichever way it's going, uptrend or downtrend, right? It's all relative to that, right? And then you can see, okay, I think my trend is ending. Part of the reason I think my trend is ending because is my point of control is moving down. But if you look at your value area, right? So like here this day, okay, we get an overlap, right? But it still moves down, right? So the value area is going lower than the previous day, but look at that overlap, right? We have about 4 or 5 ticks overlap, right? And then again, right? So we have a gap of like 1 tick. And then look here. So now we have a tight trading range, and the initial balance is large. So that would be an indication that it's very hard for the longer time traders to break out of that range, right? So like looking at point of control is just like order flow, yeah? It's like it's just one tool, and you basically build yourself a story. So you can go through multiple days and just see what happened, right? So even here, like this would be a pretty interesting day. So like it opened here. So if I was looking at the day, okay, now we have a small initial balance, right? So the point of control would have initially formed around here, and then the market kind of broke out here, and then we have a point of control that moves up. Okay, so that would be an indication of higher prices, right? And then here, so then it breaks, so then it comes up here. The point of control didn't move yet, but if you look at the gap down here, it would mean that other time frame traders are getting on board, meaning that, okay, now you've got your scalpers, now you've got your day traders, you've got your intermediate time frame traders, you've got your long time frame traders, right? You've got all of them working at once in one direction. And then you're wondering, okay, what happened here, right? So why did the market not come back to retest? Now it did the next day, but you got to understand, if you're a scalper, you're happy to exit the market here. So if you're happy to exit the market, right? So if you're selling, okay, well, somebody else is taking that order from you, so they're buying, right? So they take the market up even further, right? And you can see this is a decent excess, but this is even bigger excess, right? So based on, okay, there's emotions involved in here, right? And there's also emotions involved in here. So it makes sense that the market does actually retest that area in the future. But you can see as the day closed, okay, now the point control is shifted way up right here, right? So I would say this is an indication that the trend is basically brand new at this point, because we have a distinct shift from basically 3 days of consolidation, then a massive break to the upside, and we have a big gap, right, along with this. So this is like, it is a trending day, but it's kind of a weak trending day, because when you have a double distribution trending day, it basically means that the market is, even though it is going to retrace, it's still going to go in the initial direction, if that makes any sense. So like you can say, okay, so this day here, see how double distribution, and then the next following day, well, it does kind of look like a P shape, but if you look at the trend, look, it doesn't have a really skinny area here. So I would say that yes, it could potentially indicate weakness, but you've also got buying and selling tails on both ends, right? But you got to understand what happened here, right? So, and my value is overlapping, and my close, right? So my close on the low, right? So I'm thinking, okay, it might come back, because normally, like in a trend, you would want the close like above value or at the high of value to continue to the upside, right? So you can see when the market did open the next time, basically it closed here, right? So that would be an indication of higher prices, and you can see the result, right? Again, we have the big excess, and then again higher prices.